Hey guys, we are back. I cannot believe it is our December 2022 real estate market snapshot. This is the last one of the year. Man, where did the time go? So let's jump right in. I had this slide up last time, and what you're looking at is a QR code, which will take you to my little propaganda piece on Linktree, but it will also take you to my new propaganda piece for our 2023 real estate market forecast. We finally have the date set. We're lining up some speakers and we're doing it live. So it's been 3 years that we've been kind of in the COVID virtual world as far as our forecast is concerned. We almost did a live event in March of 2022, but if you think back, there was still some uncertainty on venues and stuff, so we didn't. But we are live. We are March 15th, about 3 months from now. We're gonna be at the Riverside Convention Center. And you may notice a new logo on our 2023 market forecast slide, and we are partnering up with the university, or UC Riverside School of Business Center for Economic Forecasting and Development. So if that name sounds familiar, yeah, they are kind of a big deal. But on top of that, UCR has been doing their own economic forecasts for 13, 14 years, and they're kind of a big deal. We've been talking to them for years, and for our March forecast, we are partnering up. So we are super excited. We're gonna have a couple of different audiences. We'll have our normal audience that the Coldwell Banker Town and Country crew bring, and then of course we'll have the UCR audience as well. So we are super, super excited to be partnering with them for our 2023 forecast. So we have an additional QR code if you don't wanna go to the Lance Martin propaganda. Fully understand. This QR code will take you straight to all of the 2023 real estate market forecast stuff. We have a brand new website, registration, the whole 9 yards. So you will start to see our email pieces and text pieces and basically letting you know as we start announcing speakers, et cetera. So, and that will be going out before the holiday break here. So expect to get some stuff from us here pretty soon. I've added a new slide, just some stuff of interest that's in the news. So we've been talking a little bit about what's going on with Chairman Powell. Today, by the way, is December 10th, I believe. Adam, September 10th or December 10th? I think so, close enough. The 12th, thank you, sir. December 12th, Mr. Powell is going to be coming out this Wednesday, and the Fed chairman will be making another announcement, or the Fed will come out and say, what are they going to do with the Fed funds rate? The expectation is another 50 to 75 basis point increase. So we'll see what that means. And a CPI number is coming out tomorrow, which very well may impact, I don't know, frankly, if the Fed changes on a dime like that or not, but we'll see. We'll see what the CPI number does tomorrow, and maybe that'll impact on what the Fed does on Wednesday. So we're always keeping an eye on that because, of course, why are we keeping an eye on that? It has a direct impact on interest rates. This is a slide that I've had up for the last couple of months. I'm just highlighting those last two interviews that the Fed did. They're available on the Linktree, so if you want to go see them, I think if you're a junkie about this like I am, that you'll see some value there. So bottom line is, what's he going to do? Is he done? The consensus that I'm listening to says no, he's not done. He will continue to raise the Fed fund rate. But the real question is all that stuff already baked in? My expectation is if he does raise the Fed funds rate on Wednesday, we're not going to necessarily see any significant change on mortgage rates, because that's why most of us are here. And frankly, rates have improved since we were here last month. So we'll talk about that a little bit as we move forward. So are we still seeing the demand and price destruction? Yes, you're going to see the charts that show that here over the next 20 minutes or so. A lot of discussion about recession. I got to tell you, I am recessioned out. Okay, are we in a recession? Are we going to be in a recession? When are we going to be in a recession? What's going on with the recession? I don't know, but I got to tell you, it feels like we've been talking about a pending recession now for most of 2023, and I'm kind of over it. So obviously that's a hand in hand with all the inflation discussion, which of course is what Chairman Powell is trying to combat. Honestly, I'm kind of over that too. I pulled up a little deflation chart. That's what this dollar is supposed to be symbolizing. We've certainly seen deflation in the real estate market. So when we're talking about inflation and all of these other goods that we're trying to get a hold of, well, we're certainly not seeing that in at least residential real estate in our world in Inland Empire, Southern California, or West San Gabriel Valley, which is mostly what we focus on. So interestingly enough, Dr. Chris Thornburg with Beacon Economics and the UCR School, who's helping us with our forecast here in March. This is, I think, 3 days old. Today's economy is running at full speed, the exact opposite of what economists call a recession, okay? If you've been following Chris at all, interestingly enough, about a week ago, he came out and publicly said that. I had a whole bunch of people reach out to me and say, hey, Chris is saying no recession next year. Talked to Chris, and he said, basically, yeah, I don't see a recession next year. I had not heard a lot of people saying that. Now, I don't know, maybe it's like when you're thinking about buying a white car, all you see is white cars. Now I see a whole bunch of people on CNBC and Fox Business and all these other financial channels that are saying maybe we avoid a recession in 2023. All I can tell you is I'm over it. I'm moving on. It is what it is. I believe even if we don't technically have a recession, I think we've kind of talked ourselves into it, and the buyer sentiment, or at least the people in real estate buyer and seller sentiment, is kind of like, well, there's all this uncertainty and discussion of gloom and doom, so I guess we're going to pretend like we're in gloom and doom, whether we actually have it or not. It seems like in the real estate world, we've kind of talked ourselves into that nonetheless. So we're going to talk about let me back up. We're going to do our normal Inland Empire slides on our counties here. We'll also talk about interest rates at the end. They've improved, which is nice. So let's jump right in. So median price in LA County, there are some trends building here, okay? You can really see as we start to pull out in these 12 months, you can kind of see this peak that we've been talking about now for the last 6, 7 months, and it just feels more pronounced. And wait a minute, Lance, does it look like we fell off in the month of November, maybe a little bit more in the other months in LA County? Yeah, we sure did. So what does that look like? I don't know what that's going to look like here in the next several months. Not so much totally unusual. You see some pullback last year, and you would see that before, but we'll talk about what that looks like here in the next couple of slides. There's our 12-month chart. Again, there's your peak. Every single county I'm going to show you except for one. I've added some bonus material this week. Basically shows property values peaked in May of last year. That's certainly true of LA County. And that's from the peak. A little bit more pronounced. And then here's our year-to-date number. Next month, I'll get rid of the year-to-date because we won't need it because we will truly be in the year. So what do these numbers mean? So in the last 12 months, LA County's lost 2% of median price from November 2021 to November 2022. Minus 2%, basically flat. I think the number that most of us are focusing on is this number. What have we seen from peak? Well, in LA County, median price, a little bit over 11% drop in property values since peak, which again was May. Here's what those numbers represent, but we're still 11.1% above where we were 2 years ago. So I think a lot of people are saying, we got this pullback. Well, yeah. I know it's a broken record, but if you've been watching my videos, when you go up 20% and 20% for a total of 40% over a couple of years, well, when you see a pullback, it's kind of hard to say we couldn't see that coming. So anyway, down 11% the last 7 months from peak, but still up 11% from 2 years ago. So you make of that what you will. What's the supply and demand look like? Again, we peak supply-wise in the summertime. As always, we come down this time of the year. The red bar is listings. The really difficult part on this is the 12-month isolated chart. You guys know you can get all of these charts. We have a link to it when you watch the video on our social media or YouTube, wherever you're seeing it, so you can get these charts. You don't have to take snapshots of them. And this is the supply and demand. I'm going to go over this, but what does this mean? Basically, for listings, flat. Basically, the same amount of listings that we had a year ago, we have today, 0.2% more than we had 12 months ago, but we're down from 2 years ago. These are the brutal ones here, guys. These are the brutal ones. This is why folks like me and my business, we got to pay the rent, we got to keep the lights on, we got to keep our agents motivated. We're basically selling 43% fewer homes. That is brutal. And the 43% is from 12 months ago, and from 2 years ago, 24 months ago, 42%. So the volume in LA County has definitely dropped. That trend will continue as we move forward. Here's Riverside. Same chart, well, similar chart, but certainly not as pronounced. The median price, month over month, from October to November, unchanged, exactly the same. Zero change. So that tends to make that bar look a little bit more positive than what we saw in LA County. Year over year, from November to November, you can't get much more flat than that. Basically a 0.9% increase from November to November. Pretty much a flat market. Again, that peak is May of 2022. So what are we looking at for that? That's the 7-month isolated chart. Here is the year-to-date isolated chart, again down. So if you want to compare January 2022 to November of 2022, we basically have lost a point. And this is what the next chart's going to show. So here we are, last 12 months, up a point, year-to-date, down a point, but where are we from peak? Well, from peak, we've lost 7%, 7.1% of median price in Riverside County, which is $550, same as last month if you guys are paying attention. Supply and demand chart, again, same brutal numbers. We've got the peak in inventory, it's pulled back, and our blue bar, which are buyers and sellers coming together, struggling, guys. It's just absolutely brutal. Again, I'm saying that from a personal perspective. If you're a buyer or seller and you're on the sidelines and saying, hey, Lance, that's okay, I wasn't planning on buying in the fourth quarter anyway, I think I'm going to wait until next year, see what happens, take a look at interest rates, that's fine. But you know, when we're selling 40% fewer houses than we were a year ago, that's a tough one. We're going to skip through this one. We can talk about that another time. So let's just skip to the bad news, if you will. 42% fewer homes sold from 12 months ago. Call it 40% fewer homes sold from 2 years ago. Very, very similar to what we just saw in LA County. Now the homes for sale, though, have increased 21% more a year ago, 27% more than 2 years ago. So we are seeing that that seller demand to sell still increase. Lance, I don't see a lot of for sale signs. Yeah, I know you don't, but there's more than there was a year ago. There's more than there was 2 years ago. But again, that demand destruction, if you will, is still tough. A lot of that seems to be impacting us. San Bernardino County. It wasn't that long ago, a couple of months ago, I'm like, hey, look how well San Bernardino County is faring. We haven't really had too much price destruction. Well, and then we hit November, and look at that nice big drop in the month of November. San Bernardino County went from one of the best performing counties to not so much based upon what they did in November. For those of you that are screaming at the video saying, Lance, that's because you're using median price and you need to be using average. I know. All I can tell you is I've been using these same charts for almost 20 years now. It all works itself out. Meaning it's entirely possible that next month San Bernardino County might have some adjustment and they're right back to where they were before. We'll see when we get there. But over time, these charts tend to average themselves out. So this is the 12-month isolated for San Bernardino. That's the 7-month isolated with that nice, how dare I, with that big downturn, especially month over month from October to November in San Bernardino County. And I think our next chart is our year-to-date chart. And last but not least, what do the numbers mean? So in the last 12 months, San Bernardino County is down 1.6%. In the last 7 months, and a big part of this 11.5% drop, frankly, happened in November, probably 4 points. I'd have to go back and take a look at last month, but I think we were probably somewhere around 6 or 7%, and we jumped to 11.5. And then year-to-date, 3.7. So for those of you that are really watching these videos on a month-to-month basis, I've been saying at some point, this number here is going to start to go negative, or these numbers are going to start to go negative. Well, that's happened in the last couple of months. If you go back and you watch from a little bit ago, this number has been going negative since June, but these have been positive. Well, guess what? We've hit that point on the charts where now we're starting to compare prices from 12 months ago or year to date, and guess what? We've pulled back. So for those of you that were calling for a pullback, guess what? You were correct. San Bernardino County supply and demand, again, very similar. There was our peak of supply. It's definitely pulled back, not unusual for November, but the same challenge persists. That's the 12-month isolated month supply of inventory. I'm going to blow past that. But wow, look at these. San Bernardino County, for just call it 50%. 50% fewer sales in the county over the last 12 months. 47.7 actually, and 46.4% over the last 2 years. That is just brutal. So if you want to sit back and you want to compare where the property values have dropped just based upon the open escrows, I think we're doing just fine. The reality is even though we're selling fewer houses, there are still buyers in the pool, and even though there's more listings, there's still more of an equilibrium in the buyer demand as far as the real estate that's available, which frankly means if you are a buyer right now and you're not afraid of this market and you happen to have found the house that you're in love with, it's out there and you're not going to be competing against 40 other people. You're not going to show up at an open house on a Saturday and have to wait in line for 2 hours in order to get into the house. So there's some good news there. So again, my spotlight city is not a city at all. We are going to spotlight the county of Orange. We don't normally do a lot of Orange County stuff, but I've had a couple of friends that have said, hey, Lance, look what's going on in Orange County. And they're throwing some numbers at me that quite honestly are bigger numbers than, and I don't just mean price-wise, than what we're seeing out in Riverside, San Bernardino, or even LA for that matter. So I figured, what the heck? Let's take a look at Orange County. We haven't done it in a while. So this is a 2-year chart on median price. And again, you can really kind of see that dramatic hump there. Interesting, all of the stuff pretty much across the board that I've seen, property values peaked in May. Well, not in Orange County. This largest bar is April. So they seem to have peaked a month before we did in Riverside, San Bernardino, or LA for that matter. I don't know that that matters, but you certainly can kind of see a fairly steady trend line in the positive, or excuse me, in the negative direction, in the downward direction for Orange County. That's the same chart isolated for 12 months. And here's just that rough one, okay? I'll skip ahead if you're not looking at 16.3% drop from April. I might have misspoke earlier. This is April 2022. All of the other counties peaked in May of 2022. So from April to November, 16.3% drop in median price in the county of Orange. This is your year-to-date number. We don't have to spend too much attention on that. So what does it mean? Okay, well, in the last 12 months, Orange County has dropped 4.1%. By the way, I'm not used to having a 7-digit number in most of my sales prices. So there's still over $1 million in median price in Orange County, 4% less than it was 12 months ago, which was 1.134 million. And 24 months ago, it was 919. So again, for those of you that are, oh my gosh, so poor Orange County, well, they're still up 18% from where they were 2 years ago. That's why I think there's, as much as we don't like to see a price destruction, at the same time, it's like, well, geez, we saw a 40% increase. So if you're going to have to pull back a little bit, we might have to pull back a little bit. So in the last 8 months, this is that April to November number, 16.3%. So for those of you that follow Orange County and say, Lance, that number seems a little small. I've seen some data that shows it's over 20% price destruction since peak. I'm not going to question that. Depending upon what metrics you're throwing in here, depending upon whether are you adding condos or townhomes into this, these numbers can change a little bit. When I run my numbers, I throw everything in that's under the residential designation in the MLS, which is CRMLS. So I'm not excluding, for example, townhomes. I'm not excluding condos. It's everything. So that could pull that number down or push it up depending upon what you're looking at. So there's your Orange County numbers. The supply and demand in Orange County, again, similar charts. I'm not going to go through these. You can look at them on your own later. Although I guess I will isolate this. It gives just a nice big pullback in active listings, and the downtrend on the pendings is just tough. I will tell you something that did jump out at me on the supply of inventory, basically the absorption rate. It's actually a little bit lower in Orange County than I would have expected. If you're looking at this bar here, that equates to 2.5 months of standing inventory in all of Orange County. That's not a very big number. And actually, as you can see, it's pulled back from the last couple of months. So interesting tidbit, if you will. This is another big surprise, actually not a big surprise, with the exception of this number. Only 866 houses went in escrow in the entire county, at least in the residential search that I pulled up. I expected more. I really did. That felt like a extremely low number of pendings to go into the market. But then when you come over and you take a look at, well, that's 40% fewer than a year ago and 47% fewer than 2 years ago. So Orange County is feeling that same pain that we're feeling out in the Inland Empire. Just from the sheer volume. Just the sheer volume is tough. So, however, the listings are up from 12 months ago, but they're down from 2 years ago. I know it gets a little bit much when you start throwing all these numbers down. So you focus on whatever number you think is important to you, and you can play it back and take a look at the charts and graphs accordingly. On the interest rate side, okay, we started a little bit talking about what Chairman Powell's going to do on Wednesday. Hopefully Adam will have this video ready for me tonight or tomorrow, so you'll be seeing this before, hopefully, before Wednesday when Chairman Powell comes out. So what impact is that going to have on rates? I don't know. My feeling is maybe none. It may already be baked in. So this is where we were as of December 8th. Earlier on, I got a little confused on what the date is. On Optimal Blue, which is where this chart came from, I pull this number and it's always a day or two behind. So this was from last week. It hasn't changed materially, but we're basically on a 30-year conforming 6.35. This is a 12-month chart, but this is where we were a year ago, just a smidge over 3. This is where we were a month and a half ago, 7.5. Well, we've pulled back down, so we're starting to see some improvement. One of the things I believe I've said publicly on these videos, if we're in a mid-6 handle on an interest rate, we're gonna be fine. I know a lot of consumers like, I don't wanna be fine, I want 3% again. I know you do, but that ain't happening anytime soon, maybe never again in our lifetime. But I think we can absorb a 6% interest rate. A lot of people are calling for less. I'm really freaked out about a 7.5 or 8 handle on an interest rate. So we were bumping up on it just a couple of months ago. I was on the video here talking about it, and if you could see it in my face, that was a lot of concern as to do we maintain that high interest rate for an extended period of time? Well, the good news, if you're a buyer or a seller or in the real estate industry, at least we pulled back and we started to see a little bit of improvement on that rate. So even though we expect Chairman Powell to raise the Fed funds rate on Wednesday, we'll keep a close eye on this. I think it's entirely possible. I'm going to be here in January, and this number will be lower than 6.35. Lance, how is that possible? Well, because there's a lot of different, it's not a straight correlation between what the Fed does and what mortgage rates are. Some, but not as straight. So at any rate, so that's where we are as of a couple days ago. This is the old Google machine that I pulled up. I just went in the same thing you guys can do on Google. I changed the credit score. It's interesting. I don't know whether it's my Google or whether it's everybody's Google, but when you do a Google on mortgage rates, the rate that it quotes you is at a much lower FICO. I think it has in there like 690 to 705 or something like that, which when you do that, that rate goes up. It'll be north of 7%. Change it to whatever your credit score is. I just took a mid-range of 750, and that brought it down to 6.7. Wait a minute, Lance, that's different than what you just quoted here. They're all different. Yours is going to be different. Yours might be lower, yours might be higher. There's a lot of factors associated on exactly what that rate is for any particular buyer on any particular loan program. But again, that is an improvement. So there we are. I think my next slide is Santa Claus. So I tell you what, guys, have a great holiday. We will see you back here in January. You will probably see a tremendous amount of stuff from me over the next several weeks and over the holiday promoting our market forecast. But at any rate, have a great holiday, and we'll see you in January.